when I divide the Nasdaq by Bitcoin, Nasdaq's down 99.97%. What's the fucking point? You just own the strongest asset. If
Oh
everything
my
is
God.
correlated and driven by the same forces, you end up with a logical conclusion, which is you only need to own one asset, which is crypto, which is bizarre. And then the game is, okay, which crypto is outperforming? You do charts of anything versus Bitcoin and anything versus Ethereum. And if anything looks like it's breaking out versus those, that was Sol. So now my job is to look at anything versus.
In a recent interview on Balthasar Becker with Raoul Pal, we gain insights into what it will take to push Bitcoin higher and achieve mass adoption. At the time of the discussion, Bitcoin is trading at $62,000, with a 2% decrease in the last 24 hours and a less than 1% decrease over the past 7 days. Pal emphasizes the importance of regulatory clarity and institutional adoption in driving Bitcoin's growth. He discusses the potential for Bitcoin to reach a market cap of $100 trillion, highlighting the need for proper regulations to eliminate scams and bad actors from the industry. Pal also offers advice on how to prepare for the upcoming cycle, including whether to take profits or hold.
Stop, you don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So right now, crypto as an asset class is $2.5 trillion. If I just use the log regression channel of Bitcoin and just project out the growth rates of crypto versus the internet, and assume it slows down massively from here, it gets to $100 trillion by about 2032. Now, $100 trillion, we throw around numbers like 100 trillion. Yeah. You've got to understand, $100 trillion, we're creating $97.5 trillion of new wealth. That is the largest generation of wealth in the shortest period of time in all recorded human history. When you understand that the S&P 500 is a $50 trillion market cap, and that took 100 years of value accretion by the US economy and those companies, this is double that. We've never seen anything like it. So it's an extraordinary opportunity. Now, of that 100 trillion, will Bitcoin be 50% dominant in that market? No. Because to get to 100 trillion, we have to be using the whole blockchain infrastructure for things like the finance system, for Web 2 businesses, for all of the other elements, not just the moneyness element or the store of wealth element that Bitcoin has. So if the world were 100 trillion, what is the value of Bitcoin in that? Maybe it's 20 trillion. Maybe it's 15 trillion, whatever that number is. So it's the overall space that's going to see the growth. If it is the fastest accumulation of wealth in all history, it will attract all sorts of people. Now, when you talk about the gold rush in California, there was these wildcat miners, there was the scams, the crooks. We see it in the oil and gas business. We see it in the gold business. We see it on the internet everywhere. The Nigerian prince scam is just because the internet allows money to move more freely. So of course we're going to see it in this space. And it's very difficult to avoid it. Whenever there's a large increase in money available, you get criminality. We saw that in Russia after the Iron Curtain came down. We see it in China. We see it everywhere where there's access to new money, it has bad actors. That's always the case. And that's what regulation needs to be for. That's what, we need to get better about dealing with. We're just so far behind being able to deal with these kinds of people so far. But the great thing about the on-chain world is everything is trackable and traceable. We can figure it out.
As we just heard, Raoul Pal discussed the potential for the crypto market to reach $100 trillion. He emphasizes the importance of global liquidity cycles and rapid adoption rates. Pal then explores the convergence of blockchain technology and artificial intelligence, suggesting that this combination could lead to revolutionary changes in various industries. He explains how AI agents could interact with blockchain networks to create more efficient and transparent systems. Pal also discusses the potential impact of these technologies on financial markets, predicting a shift towards decentralized finance and automated trading systems. Now, let's listen as Raoul Pal delves deeper into the interplay between crypto and AI.
I'll think about there's two layers to crypto. There's the blockchain and the tokens themselves. So the blockchain, incredibly useful for proving who's real and who's not. You know, we've seen Sam Altman start WorldCoin. This is based on this premise: is like you won't know who's an AI and who's not. And blockchain, being an immutable ledger, is a very good way of doing it. It's a way of proving humanity or proving AI or whatever it may be. So I think that's a very big deal. We will all have a digital identity that will be on blockchain to prove that we're human. The other side is AI is moving to a world called agents. AI agents are sub-AIs that do work. Now, hey, build me a deck, edit this video, do this for me, do this expert piece of knowledge. It's much like going on to Fiverr or something like that and paying people to do that work. These agents that get built either by AI themselves or by other people, well, AI is not free. There's compute and electricity. So how do they charge? And many of these will want to make a profit. So how do they charge? Well, last time I checked, AI doesn't have a bank account. Well, it can't. It hasn't got a driving license. It doesn't have a proof of address. How's it ever going to get a bank account? It can't. Also, because of the payments are micro in both time and price for these small acts, the entire system of money doesn't work for it. It's too slow. It's not small enough. It's not fast enough. So blockchain is cryptocurrency is the obvious answer of how agents to agents work. And as you say, they don't care about the UX, but what you have is an immutable ledger of the transactions. So that's where I think the big use case is machines will use digital money. Of course they will. Real world assets on blockchain.
Yeah.
There's a big movement in the property sector to do this, but the interests aren't fully aligned. It's really property guys trying to get more liquidity out of individual retail investors. But retail investors, do they actually want to own a hotel in Aspen? My guess is no. So I'm not sure the property sector is the big lead here, but real world assets, certainly the financial market, bonds, equities, all of that makes total sense. Cars, this stupid idea of having, you know, your deeds to your car and stuff like that. You want to sell your car, it should be able to attach with the insurance, attach with everything, and I can transfer it to you immediately in a smart contract. Sure. We've already seen people experimenting with that. We'll see a number of real world assets, I think, come on chain. But I don't think that's the big thing. I think the digital assets, things like our identity or stuff like ticketing. These are huge volume things. Advertising. These things can all go on chain. People think of like physical thing because that's the way you get to speak to a boomer about it. Like, oh, you could tokenize a house, and they're like, oh, that's amazing. That's really boomer talk. The reality is, it's the digital world that you live in that's going to see most of it. So now, when I was a kid and I would go to a concert, I'd have a ticket. Now it's all on our phone app. In future, it'll be an NFT. And that NFT makes it resellable. And maybe it automatically pays a commission to somebody in the middle of that because it's in the smart contract. But maybe I went to the best concert of all time. I was at Live Aid in 1985. Maybe I then own the NFT of that. I actually have the program and the ticket. But let's say it was now and I own the NFT. Well, that NFT is valuable to people because it was an iconic moment in time. So now my ticket has a value, not just in the secondary market, but the tertiary market after the event. Think about all the hotel rooms in the world. The amount of times you travel somewhere and then you're like, shit, I need to change my plans. You can't get out of your hotel. You know, suddenly you've lost 300 euros in your hotel room. Now, what happens if hotels were NFTs or your hotel booking was an NFT? I could then put it on a marketplace and say, hey, I can't make it to New York this weekend. Here's my ticket, 50% discount. Somebody can buy it off me. That's great. That adds liquidity to a system. It's kind of like the Uberization of the world, where you can fractionalize a whole bunch of stuff and release trapped capital in a whole bunch of things. So I didn't take profits last cycle, and I didn't want to, because I've found that just holding over time, even though it feels dramatic, holding over time and adding when it sells off actually is the way to compound wealth. Because you don't, because if not, if you've gone in a bull market from 1 to 10 and then it falls 80%, you won't put 10 back in. You won't, because you're more risk adverse. And I can't lose everything, right? Your mind will play tricks with you. So you just leave it in and just say, okay, I've got a longer term time horizon. But for those people who want to cash in some lifestyle chips or de-risk, then, you use some time, like the end of the year, beginning of next year, you cash in a bit of money and then just ride the rest. Now, does it peak early? We don't know. Does it peak towards the end of the year like it's done in every cycle? Possibly. Do we have a blow off top? Possibly. I don't know. We can't really tell. So you need to set yourself up in advance where you're not hoping for the blow off top. You've taken some money off. And if it does blow off top, you can take some more off. If not, you just keep running it.
Would you recommend selling everything in the end of the year, basically? Or would you say
No.
I cost average out of it, or you just sell 80% of it? Or
I would say if you're under the age of 30, you should do, or under the age of like 35 or something, you should do nothing. Unless you've got enough there that taking 25% off can buy you a house or something that you really need.
your life-changing opportunities.
Something life-changing that secures your life and ratchets you to a new living standard. If not, you should do nothing. You should just be thinking, how can I buy more when it sells off?
Okay, so we've got one.
Yeah. I traded it. I traded it over the years. I've been involved since 2013. And I figured out, I traded it pretty well, but I figured out if I just held my original investment, I'd have been 5 times better off. And if I'd have just bought every dip by adding the same amount as my original investment, I'd have been 25 times better off. That's how you compound wealth.
Yeah, we've got 1 minute left. So there's one last question I have. Do you have some alpha idea that you want to share with us? What is in your mind right now? Do you have anything?
I gave you a hint before. It's a very powerful trick and people don't understand it. If Solana is the most powerful asset of this cycle, okay, of the major cryptocurrencies, you will, in the banana zone, be wanting to throw money at all sorts of other stupid shit. The way to hold yourself accountable is show and prove to yourself and anybody else on a chart that it is going to outperform or it is outperforming. And most people, you can't. Most of the ideas you have don't outperform the best asset. And it stops you overtrading. It stops you doing stupid things you shouldn't do because your friend told you, hey, if you looked at this new coin, it's going to be amazing. Unless you've got real evidence of a sustained structural outperformance of Solana, don't do anything.
As we conclude this insightful discussion with Raoul Pal, we've gained valuable perspectives on the potential for crypto to reach a $100 trillion market cap and the convergence of blockchain with AI. Pal's optimism about the future of cryptocurrencies and their role in reshaping our financial landscape is both exciting and thought-provoking. We would love to hear your thoughts on a few questions. Do you agree with Pal's prediction of crypto reaching a $100 trillion market cap in the coming years? How do you see the integration of AI and blockchain technology reshaping our financial systems in the next decade? For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.